If you're expecting a bunch of guru fluff and get-rich-quick garbage, you've come to the wrong place. This show is the no bullshit real deal.
No bullshit real deal.
I'm Larry Harble, and they call me the real deal. Welcome to my show. This show is aimed at providing you with quality information so you can make more profit in the fastest way possible without making costly mistakes from the deals you do.
Let's get started.
Hello, everyone. Today I thought I'd talk about something that I'm hearing a lot about, and it's starting to bother me a little bit because too many people, I believe, they're talking about the real estate housing market going into another correction. Now, we've got some people that believe it could be as bad as it was in 2008 and 2009. I don't believe so. I know the market in many areas has slowed down, but I still think there's multiple opportunities out there. Now, many of the people I listen to or talk to, they're saying that, they believe that the coming correction isn't going to be as bad. And I surely hope it isn't. Because, the last correction we had in 2008 when the market tanked, here in my market in the Tampa Bay area, we lost about 50% of the value of all the properties overnight. So if you had a $300,000 house today, tomorrow it was worth $150,000. And that created a lot of havoc for people that borrowed money, paid $300,000 for a property, and overnight it's worth half that much. And they don't want the property anymore because they owe more than it's worth. One of the things that you got to remember, even if the market goes down, it will come back up. And if you're in it for the long haul, the prices will come back and you'll be fine. But if you panic and you sell, that's when you're going to lose. Some of the people, they think that, and I had this conversation this weekend, they're saying that because of the Fed funds they're raising the interest rates, that's going to have a major effect on market conditions. And I've also heard that some of them are saying that the wild swings in the stock market is going to affect house prices. Now, I don't know what's going to happen, in the housing market, but I do believe if the real estate market tanks again, it's not going to hamper the knowledgeable investors, such as myself and many of you, who are buying houses creatively in any market. I learned a great deal from that crash of 2008. Believe me, I learned a lot. I was lucky. I didn't lose any property. And because of the way I buy creatively, I didn't have to, but I could have lowered my rents and still kept my properties, even when the values went down, because of the way I structure my deals. And that's very important, and I want everybody to listen to that. It's how you structure your deals. It's how you write up the paperwork. That is critical because if the market does make correction, and we all know that the market changes every 7 to 10 years. It goes up, it goes down. But like I've said 1,000 times, when you're doing seller financing, it's the only constant in the real estate market. It's what they did back in biblical days, and they'll do it 1,000 years from now. Because seller financing has nothing to do with interest rates, economy, none of that. It's a deal between you and the seller, whatever you want to agree to. The interest rate isn't mandatory. None of that is. Now, when you borrow money institutionally, let me ask you, who sets the price? Well, I'll answer that. The bank does from the appraisal they get, which is usually going to be pretty conservative. Who sets the payment? The bank does. Who sets the interest rate? The bank does. And the payback term? The bank does. You see, with seller financing, none of that applies because it's between you and the seller. You could go out longer. It could be shorter. You can raise the interest rate. That's a very important lesson you need to learn is when you're doing seller financing, it's a deal between you and the seller and nobody else because banks and their practices have nothing to do with your deal. Now, I know when house prices continually go up, eventually there's got to be a correction in the market. It can't go up forever. We learned that because back in 2006 and 7, market conditions were going crazy. Prices were going up every day. People would make full price offers to buy houses. The sellers would say no because they knew tomorrow someone would come along and offer them more. It couldn't sustain. We're not at that point today, I don't believe. But I know for a fact that rising interest rates will definitely affect investors as well as home buyers who are getting institutional funding, not people that are doing seller financing. You see, I know when interest rates rise, fewer home buyers are able to afford the increased cost of the payment because that monthly payment, that interest rises and makes the payment higher, and many people can't qualify for a loan because the interest cost puts it out of their range. Now, those of us that deal directly with the sellers, those sellers that are willing to allow us to pay them monthly over a long period of time, we're not affected like those investors who are forced to acquire institutional loans. You see, when you're dealing with sellers, you don't have the same problems you do when you deal with a bank. Over the last 40 years, once sitting at hundreds of kitchen tables, I was asked for my credit report. Once, only once. Where with a bank, they want to see everything about you. So I would much rather deal with people. It's just that the people have to believe that you're going to pay. You have to be sincere. You have to make sure that they feel comfortable. Everybody has to feel like they win in every deal. Now, the investors that are buying income properties to be held over a long period of time, they're not usually affected by any of the market swings or stock market changes simply because we negotiate our deals that allow us to rent the property, and from the monthly rental income, we have our costs figured in for each property, and including in that, hopefully, we'll have enough left over to give us a little bit of cash flow every month, but you have to be realistic with that monthly cash flow. Your numbers are critical. Now, anytime an investor can buy an income property with seller financing terms, the terms of that sale, that's going to be an arrangement of price and terms between the investor and the seller only. Nobody else is there. There's no committee. Nobody approves it but the seller because no banks are involved in the deal. So you always want to try to negotiate a price that's going to allow you to make a profit or to get terms that's going to allow you to buy the property and have it pay for itself and hopefully allow you to make a monthly cash flow. That's the goal. Remember, every income property is a business unto itself. That property, from the rent it brings in every month, must pay for itself. If it doesn't pay for itself, when you're doing your numbers accurately, you don't want the property. Now, many of you know my rental formula that I live by. When you use that formula to buy any rental property, it's going to tell you the truth. It's going to take what it'll bring in rent. It'll tell you what the expenses are. It will tell you how much you have left over to make a payment with. It's realistic. It's accurate. And the thing is, price is not as important as long as you can get terms that will allow the property to pay for itself. And it's possible because you're dealing directly with a seller and you can talk to them, you can move the parts around, you can do what it takes. So, like I said, because no bank's involved, you got to get price or terms so the property can pay for itself. Now, every income property that's got to be bought, like I said, to pay for itself. If it doesn't, you have no reason to buy that property. Now, once you're able to master negotiating a price you like or terms that's going to allow you to make a satisfactory profit, is when the deals you do will always be more profitable for you. This is critical to your financial future. You got to remember this. All too many people do things they later wish they hadn't done. We all know that. We've all been through that. Now, here are some of the things to remember if you want to be a successful investor. Number one, you want to think before signing on the dotted line on any of the deals that you're doing. It's always better to ask your mentor for help before making a big mistake you will later be sorry you made. Next, you've got to get off the couch. You got to stop procrastinating. You got to take action. Too many people let life get in the way. This is a business. You have to work it like a business. If you have a job, you go to work every day to get your paycheck. Real estate is no different. You don't have to work the same hours. You have much more freedom, but you still have to put in the time and the effort. Next, always do the numbers of every deal thoroughly, not haphazardly, and not incomplete. That's why the formulas that I've got in my Never Step Into a Bank boot camp that my students use tell you exactly what you can pay for a property so you don't ever lose money again. That's critical. Now, sellers are usually home nights and weekends. This is when you will do most of your meetings with sellers. Too many people, they don't want to put in the time. Sellers are home nights and weekends. It just makes sense. That's when you're going to be able to talk to them. Now, if you're dealing through a real estate agent, it doesn't matter. But in most cases, real estate agents get in my way because I need the conversation with the seller to ask them the questions that are pertinent to the deal I want to do. So, you're never going to learn how to be successful as a real estate investor going to real estate meetings. You need to get in the streets. You need a mentor. You need information. Robert Kiyosaki, the author of Rich Dad, Poor Dad, said there's two ways to make money. Number one is real estate. The other is investing, education. He's absolutely right. You need the education because you can't learn it by osmosis. You can't learn it going to a meeting once a week or once a month. You need to get education, and the real estate's very important. So if you're going to buy real estate and you're going to be a real estate investor, be good at it. Do your numbers. Know what you're talking about. I've got over 40 years of experience. I can share a lot of that information with you. I try to do that on these podcasts because this information I'm giving you, you may think doesn't apply in many of the things you're doing, but you're wrong. You're wrong because any knowledge you can pick up from someone that knows is going to be of value to you. Now, some of us are getting up in years. My point is we're not going to be able to teach forever. Once we're gone and we decide to retire, all the information we've learned through the years, all the bloody battles we fought, that information is gone if people don't take advantage of it while we're still teaching. Be smart. Get yourself a good mentor. I'm available for people that are interested in learning about seller financing, doing creative deals, doing things on purpose. That is where the money is made. I learned that. I used to try and do it on the cheap. I thought I could learn going to meetings. I was wrong. It wasn't until I got training from my mentors is when the money started coming in. So think about that. It's very important. It's critical to your success that you learn the right way to do it and not just go out there thinking you've got a little bit of information and you're going to set the world on fire. It's not going to work. So I hope that's helped, and that's going to wrap up this episode of my podcast for this week. Now, I hope you found value from this topic today, and I invite you to head over to LarryHarbolt.com, register to keep up to date with more ideas and tips to help you become a better real estate investor. Be sure to tell a friend and leave me a review on the podcast player that you're using right now to listen to me. Your reviews help me to know that the information I'm providing to you is valuable. That's important to me. So go to my website, LarryHarbolt.com. Look at the Never Step Into a Bank 4-day training. Look at the 3-day land trust class. These are two critical courses that you need, and it's going to make a big difference in your life. So I want to wish everybody good luck and happy investing.
Thanks for listening to the Real Deal Podcast with Larry Harbolt. To learn more about investing in real estate, head on over to LarryHarbolt.com and register for his educational tips and articles delivered by email.